So when is this stock market weakness going to end? It's been a while that we've been in a downward trending market, a crash of sorts. The question that I think everyone is wondering is, when is it time to be a buyer again? Well, I'm going to explain what to look for and really set up a mindset for how you can answer that question and use it going forward for any weak market condition. Then I'll do my normal analysis of the markets. We'll look at the stock, commodity, currency markets, and then finally I'm going to look at the trade of the week, a very hot stock this past week. OST was the symbol. But let's begin with a talk around when will this weakness end. The thing you have to understand is that markets hate uncertainty. And the reason that the market has gone lower in the last little while isn't because corporate earnings are lower today. It's the concern about what tariffs and trade wars could do to earnings going forward. But more importantly, it's the uncertainty. We don't know when the next surprise announcement on a tariff will come out. We don't know what's going to happen after the 90-day period around tariffs against other countries from the US will end and what will come out of that. So all of that uncertainty makes people just unwilling to act. The sellers get scared, they sell. The buyers are not willing to step up and defend the stocks and buy them at bargains. So what do we have to look for? Well, the first thing we have to do is change our mindset. If you're waiting for the news to tell you when the market is okay again, you're going to be too late. The simple reason is the stock market is not fair. Some people get better information than others, and it's usually the largest investors with very large amounts of capital to put into the market that know what's happening before the general public. And that's why if you're waiting for the headlines, you're going to be too late, because the market tends to price in information before it is widely known. And so instead of waiting for the positive news to come out, you need to watch the charts to see what those large investors are doing in the market, what they're buying, where they're being aggressive, and where they're sitting on their hands and waiting for things to improve. So the simple answer then is to watch for what I call the reversal pattern, and I'm going to show you that now. Let's go to my website, Stockscores.com, and of course, just remember, we have a free weekly newsletter at Stockscores.com. You can register right there on the homepage. I do trading tactics, my market analysis, all sorts of things. It's free. It comes out every Monday. But let's jump into a chart of the S&P 500, and we'll use that as sort of the benchmark index to help us understand what's going on. Now, when we're picking bottoms, we can do so on many different time frames. A swing trader might look at a 1-month hourly chart. So there's a 1-month hourly chart. And I can see that the sellers are in control because the tops are falling. I do never want to be a buyer when the tops are falling. However, in the shorter term, we're starting to get rising bottoms. So we have rising bottoms up to a downward trend line. If we can break this downward trend line from a rising bottom, and that could happen next week, then the buyers are coming in. But remember, this is a very short-term chart, so it's really only suitable for the shorter-term trader. If you're looking to trade the bounce over the next few days or maybe a week or two, this would be the chart to watch. There's two types of buy signals. There's one when the market gets very oversold, where you're far below the trend line, and that happened back on April 7th, and then a little bit again on April 9th, and you see that the market snapped back from being oversold. But a true trend reversal happens when you break the downward trend line from a rising bottom. So we're right at the trend line now. We've built the rising bottom, so that could change. However, that's for the the shorter term trader. What about sort of the medium term? Well, then you want to look at the daily chart. Where's your downward trend line? I can start my line at the high and just let it fall until it hits the tops. Okay, we call these inflection points. And you can see that we're still well below that trend line. We have the potential here with that little rising bottom building, but we need to break that downward trend line on the daily chart before we get optimistic. Until then, we could easily take another leg down if some negative announcement comes out. The momentum is negative, so you want to stay away from the market in general unless you're a shorter term trader, or unless you're focused on what we call alpha stocks, where are really not correlated to the market. Let's now take a look at the 3-year weekly chart. And here you can see that if I draw a trend line like this, I have fallen to the trend line. And so that's a really good reason to think that the market's going to bounce and hold here. So we're starting to see some decent signs that maybe there's not a lot of downside because we have held this trend line multiple times on the weekly. Then when we look at the daily, we can see that we're flirting with that downward trend line. And looking at the hourly chart, we see that we're flirting with that downward trend line. So there are some signs that the market is bottoming, but we don't have the conclusive signal yet. That could happen Monday, Tuesday, Wednesday. It could happen very soon because we are right at the trend line. But don't anticipate it. I have seen it many times. Markets rally up to the trend line, get stuck, roll over, and go lower. And that certainly could happen. So wait for the signal and make sure you're subscribed to the Stockscores YouTube channel because I'll do this analysis for you every week. All right, let's get into our normal analysis of the markets. We've already done the S&P 500. Let's take a look now at the NASDAQ 100, which is symbol QQQ, just to get a sense of where the tech stocks are. And they certainly, when we look at this long-term chart, they have done worse than the broader market. Remember on the S&P's chart, we hadn't broken that long-term upward trend line yet, but on the tech stock heavy NASDAQ, we have broken that. So that's a bit of a negative, and that makes me worry that maybe we come up, build a falling top, and then get longer term weakness. So I think that you have to sort of move away from some of those tech stock names unless their charts individually are quite good, but the NASDAQ market is underperforming the broader market. What about the small caps? Well, the small caps are much more interest rate sensitive, and we haven't seen much in the way of lowering rates in the US. The market was hoping for more in that regard, hasn't got it, and that's why the small cap index has really underperformed. And you can see that it is in a clear downward trend, and there's really no rising bottom building. So I'm not too enthusiastic about buying small cap stocks until we can build a rising bottom and break that downward trend line. With that said, some of the best trades that I do these days are in cheap stocks because the alpha stocks, the stocks that trade on their own story that can make big jumps, and I'm going to show you one at the end of the video that made a huge jump this past week, they tend to be very small cap stocks. So you can find individual opportunities in the small cap area, but in general, that area of the market is not great. All right, let's now move to the Canadian market. T.XIU is the symbol. And there you can see, again, falling tops. This is the daily time frame. There's a lot more volatility in the last little while. It's not really stabilizing the way the US market has started to stabilize. But either way, sellers are still in control. There's no rising bottom. This is more like the small cap sector. And like the small cap sector, there are pockets of strength in the Canadian market. And one of the biggest areas of strength in the Canadian market is in the gold mining stocks because there's your chart of gold. We've been bullish on this for a long time, and it continues to move in this upward trend. Now, I do think it is getting risky, and here's why. Here's the 3-year chart, and if I draw a line across these bottoms, you can see that we are far above the line. That means the market is overbought. Anytime you run away from the line, you usually come back to it. Run away, come back to it. Well, look how much we've run away. We are due for a pullback to the line. Now, there is no signal to sell the gold sector. You can see here, this is the short-term chart of gold, and it's in a nice upward trend. But if we start to build a falling top on the hourly chart of gold, I would maybe take some profits in that area because I do think a pullback is likely to happen. Let's move along to oil now. And oil obviously got very beat up when global tariffs started to rear their ugly head, as it could slow down the global economy, and of course then less oil is in demand. We were very oversold. Here's our downward trend line, and here look at how oversold we are. We are far below the trend line. So we're now working our way back up to it. That's good, but it's really just bouncing back from being oversold, not really showing that the buyers are excited about oil. So I want you to be fairly cautious with oil. The long-term picture is okay. It's stable. You know, you've been in this sideways trading range for almost 2 years, and we're oversold, as I said, probably come up into here, but then I worry you might get stuck, and it'll really depend on what happens in the trade wars around the world. All right, moving along to the US dollar, and then we'll do Bitcoin, and then we'll do the bond market. Here is the US dollar, very weak. Obviously, the trade tensions are making assets want to leave US denominated assets, and that is a negative for the US dollar. It too is oversold, and you can see we're quite far below, so you should see the US dollar bounce back a little bit. But looking at this 3-year chart, I'm still worried that there's just too much pessimism right now. It's going to take some time for this to start to get better. All right, finally, we're going to take a look. Oh, actually, got to do Bitcoin first, because Bitcoin's chart is improving, actually. It is slowing its pace of falling tops or downward trend. It's still not great. If I look at the 1-month chart, you can see that it's starting to stabilize, starting to build rising bottoms. It's kind of sideways over the last month, so it's better, but I don't think it's great. Looking at the 3-year chart, it is holding this long-term upward trend line. So it ran away, it pulled back. Just like here, it ran away, it pulled back. It should bounce, but there's not really a strong sign that is bouncing yet. And you can see the sentiment stock scores are still fairly weak. All right, last chart we're going to look at is TLT, which is the bond market and really going to drive some of the action in the small cap market. And you can see we're holding support. We had this big sell-off here, but the trend is generally down. Looking at the 3-year chart, the longer-term time frame, what we see there is coming down into support where it should bounce, generally sideways for the last year. We're at the bottom of the range, so it should bounce back, but you know, the sellers are still pretty much in control of this market. So my ratings then, bearish on the short term for large cap stocks, neutral long term for NASDAQ, bearish on both time frames. US small cap and Canadian, short term bearish, long term neutral. Gold still bullish, but I think gold is risky, and so you want to watch for a sell signal there. Oil, neutral on both time frames. US dollar, short-term bearish, long-term neutral. Bitcoin, short-term neutral, long-term bullish. And bonds, short-term bearish and long-term neutral. All right, now let's get into the trade of the week. And earlier in the video, I talked about alpha stocks. These are the stocks that can make big moves on usually very strong volume, even when the market is doing poorly. And this is where I'm focusing my attention as a trader. I always look for the alpha stocks. And the telltale sign of an alpha stock is one that's trading with abnormal volume and moving up strong. And then it's simply a matter of finding the right entry points. And for that, I use 2 indicators. One's called the wave up indicator, and the other is called the action candle. And when we look at my chart in just a moment, you're going to see a blue dot, which is a wave up, and the pink and yellow dot, which is an action candle. So what these are looking for are, it's basically an algorithm, looking for entry points. So I see a blue dot right there after the initial show of abnormal activity. And so this was the first buy point on OST. Then we had this ascending triangle pattern build here and ultimately getting a breakout through resistance from low volatility. And that led to this nice move. There was another pattern here. This is called a pennant pattern. And again, the trigger is the action candle, and it also ran nicely. So you had a number of trades on OST on Tuesday. And the stock just kept moving higher and higher, moving, you know, from initial buy signals around $1.30, $1.40 before hitting a high of over $4 in the day. And that's the kind of stocks I love to trade. And if you want to learn more about how I do that, go to the Stockscores.com website. In the trader training area of the website, you can learn lots there. Hope you've enjoyed this week's video. If so, click on the like button. Make sure you're subscribed to the channel. I do these updates every week. And most importantly, trade well.